All right, we are live. And I'd just like to welcome those who have already joined. Margaret, I see you. Thank you for joining. We're going to give it about a minute or so to allow more folks to filter in. Welcome to Skyline Flow Control. Keith, thank you for joining. It's great that you were spending a very sunny Thursday lunch hour with us. I really appreciate it.
I appreciate it too.
Oh, and Veronica, I saw your screen just flip forward on your.
Yeah, it just flipped over. So I'll get back to the, whoops, why is it doing that? Okay, I'm on slide 1. Okay.
Perfect.
Good.
All right, Mary, welcome. Ken, great to see you. Andrea, thank you for joining us. Now, I know we have a number of other folks registered, but in the interest of time, I'll get going with some of our housekeeping remarks now. So thank you again for being here. I really appreciate it for today's Lunch and Learn webinar. Before we begin, I'd like to acknowledge that the Richmond Chamber of Commerce operates on the traditional territory of the Musqueam First Nation. They have lived on this land for millennia, and I'm very grateful that we can gather here virtually today. And I'd like to acknowledge any of the traditional territories that you may be joining us from today. So before we begin, I have some housekeeping items to go over. So you will see that you are on mute and your camera is not turned on. That said, we are encouraging your questions. Veronica wants to hear from you. So you can submit those in writing via the Q&A function at the bottom of your screen. And Veronica and I will be going over those at the end of the session. We are going to end on time at 1 p.m. today, but before then, we're going to get to as many questions as we can. But if you run into any problems during the presentation, any technical issues, please reach out to us via the chat function. So questions in the Q&A, any tech issues in the chat function. So now that our housekeeping is out of the way, it's absolutely my pleasure to introduce our presenter for today, someone many of you will already know well, Veronica Armstrong. Veronica is the founder and CEO of Veronica Armstrong Law Corporation, a boutique law firm based in Steveston. Veronica and her team help investment firms comply with securities and anti-money laundering laws, which includes developing their policy and procedures and training staff. Veronica has been practicing securities law in Canada for over 20 years and also includes corporate law and personal planning in her practice. Previously, Veronica was the head of corporate and international legal team for a major South African bank. So please join me in giving a very warm welcome to Veronica Armstrong.
Thank you so much, Shana, and welcome everyone. Thank you for attending today's session on anti-money laundering for the mortgage industry. And whether you're in the mortgage industry or simply attending to learn about anti-money laundering requirements, it's good to see you here today. I also hope that there are people here from the real estate industry and from financial institutions, because this will actually be a good refresher for them. Now, anti-money laundering requirements apply to a wide range of industries, and I'm going to tell you in a few minutes why it's going to now apply to the mortgage industry. But first, let me scare you with a few statistics. So RBC was fined $7.4 million. The TD fine that I refer to there actually is out of date, because last week we got the actual announcement from FinTrack that TD was fined $9.2 million. Still, it's a sizable sum of money, even though it might be what some consider a drop in the ocean for a large bank. Several $1 million, though, for non-compliance. It seems like a huge penalty. And that is the power of FinTrack. So FinTrack is the federal agency in Canada responsible for collecting, analyzing, and distributing financial intelligence about money laundering and terrorist financing. So why do you do that, do you suppose? Well, they need it to actually control what happens with our economy. And how do they do that? Well, they do it through this legislation. And this is the legislation that was amended in October 2023 to include the mortgage industry as well as the armored car industry. Can you believe? Okay, but what is it? So we get our requirements, our anti-money laundering requirements from the Proceeds of Crime, Money Laundering and Terrorist Financing Act. That's the main statute. It's a mouthful, I know. But there are also anti-money laundering requirements in the criminal code. So yes, that is scary. You could, in fact, go to jail for certain things. And FinTrack guidance, although this isn't law, this is what FinTrack auditors will actually use when they come in to audit your business to make sure that you are complying with the requirements. So it's always good to be on top of what FinTrack policies actually say. Let's start off by considering what money laundering is in the first place, although I'm sure you have a good idea about what it is. Still, FinTrack wants to make sure that everyone's on the same page about it, since they mandate that training programs actually cover what constitutes money laundering. You basically wash dirty money so that it comes back into the economy clean. In the old days, in fact, I remember when I was working at a major South African bank, the fraud department one day showed me 2 checks. One of them had all of the details printed on a laser printer. So the checks had been printed with the laser printer, and it was the worst way to print checks because you could actually take a pair of tweezers and you could lift the ink off the check paper. Unfortunately for the crooks, it wasn't quite so easy to add numbers. You couldn't do that with, you know, the special ink that they use. So they had to write it in with a pen, and to get it the same font size and in exactly the right place wasn't. But still, it needed a human being in those days to actually examine the checks. So how, you know, if you've got tens of thousands of checks going through the system every day, it's impossible to pick them all up. So the crooks were, you know, just hoping that they'd be the ones to sneak through. But I literally saw one that had been washed because another check, the people had used bleach to change the name of the payee on the check. So that one was literally washed. So interesting. I don't know what happens these days when we're into more electronic funds transfer, but believe me, cybercrime is still happening and it's everywhere. So what is terrorist financing? Now, it doesn't matter in terrorist financing whether the money is clean or dirty. It is used to support domestic or international terrorist activity. And if you suspect in any way that any transaction you're involved with has got a hint of terrorist activity, and I'll talk about this more a little bit later, you've got to report that to FinTrack. Okay, why does Canada care about all this? Well, for a number of different reasons. It's a member of the International Financial Action Task Force. And when Canada was audited by the FATF a few years ago, it was actually criticized because its legislation and the implementation of its legislation, they felt Canada just wasn't doing well enough. And money laundering, as I said before, affects the entire Canadian economy. Plus, even if we don't know it, terrorism is in fact alive and well in Canada. So why the mortgage industry? Well, the Cullen Commission, and if you remember, the BC government has long been concerned with anti-money laundering in the province, and they've had a series of commissions. The last one was the Cullen Commission, and the Cullen report came out at the end of 2022. In that report, what they say is the absence of a reporting requirement for mortgage brokers is a significant gap in Canada's anti-money laundering regime. So the federal government targeted the mortgage industry in October last year, but the writing was already on the wall. The Cullen Commission found that BC was a right place for money laundering to take place, which we already knew. And even though they didn't really find money laundering in the mortgage cases that they examined. They still felt that there was a gap because lots of real estate transactions, in fact, were the subject of money laundering. So the BC government didn't want to take all the heat because they've got nothing to do with anti-money laundering requirements. That all comes from the federal government. So the BC government actually lobbied the federal government and said, you have to do something about this. So they lobbied for stronger action. Realtors were already covered. And, you know, mortgage brokers obviously play a huge role in real estate transactions. So that's why we see now that the mortgage industry is being brought into this regime. And not only that, the government was trying to level the playing field because banks and other financial institutions that do the conventional mortgage lending were already subject to anti-money laundering. So why shouldn't private lenders and the channels that they use not have the same requirements applied to them? So let's have a look at what this means to those of you who are in the mortgage industry who will be subject to the regulations come October. And although I mention only the big banks on these next two slides, I should point out that in the last couple of years, several real estate agencies in BC have been hit by fairly large fines as well. La Homes Realty and La Homes Realty First were fined almost $300,000 each, and Cathay Pacific Realty was fined just over $200,000, and more recently, Remax Kelowna was fined $150,000. So you see, FINTRAC has really been going after people in the real estate industry, but their fines, of course, were a lot smaller than what we see for the banks. So let's see what happened with RBC. Where did they go wrong? Well, they failed to submit suspicious transaction reports in 16 cases that FINTRAC examined that had suspicious indicators. Also, they didn't develop or stay on top of developing and effectively implementing their AML policies and procedures. Still, you know, if you look at 16 suspicious cases that hadn't been reported, a $7 million fine is pretty huge. Let's look at CIBC, because they got a fine of almost $2 million. And you can see there's a pattern. Failed to submit a suspicious transaction report. And this is only one. So in this case, the client had been charged with criminal offenses, and CIBC knew that. They actually looked at the client's activities and they said, no, this is just a normal transaction. Everything is fine. But what happened in this particular case is that there were suspicious indicators and they didn't take those into account properly. Plus, you also have to file, and you probably all know this already, when you receive money that's $10,000 or more in a 24-hour period, that's called a large transaction. And whether it comes in by cash or by EFT, you're supposed to report that. And CIBC, in fact, failed to report their large EFT transactions in more than 1,000 cases. TD's deficiencies, in fact, were very similar, not on the EFT side, but on the suspicious transaction reporting side, and not doing enough and not failing to file suspicious transaction reports when they should have. So for you to avoid the consequences of what we see with the bank's failures, what will you need to do? And remember, you've got to have these things in place well before October. Otherwise, you may be behind the curve. So this is the basic structure of the compliance program. And today I can only cover the basics, but please contact us if you want more detail or you need assistance with doing some of these things. The first thing you must do is appoint somebody as the chief AML officer. I call this for short the CAMLO, okay? So somebody has got to be in a position to actually develop and implement the policies and procedures for the mortgage lender or the mortgage administrator or the mortgage broker, and make sure that everybody gets trained on it, make sure that they're monitoring to see that everything is being done the way that it should be. So that's the first thing. So then the second thing, obviously, is the foundation of the whole compliance structure, which is your policies and procedures. And those must be designed to detect, manage, and report money laundering or terrorist financing activity, which means you've got to be watching all of the transactions you have with your clients. You also have to do a risk assessment business-wide. You need a training program for staff and agents. And every 2 years, you have to review your compliance program to determine whether it is, in fact, effective. And then, of course, if you come across a suspicious transaction, you have to report that. If you have large transactions, in other words, you're receiving more than $10,000 in a 24-hour period, you've got to watch that too. And if for any reason you suspect that somehow one of the parties in the transaction is a terrorist or maybe a terrorist or is somehow linked to a terrorist organization, you've got to file a terrorist property report. And I'll talk about these in a little more detail in a bit. So you've got your policies and procedures. They must be tailored to your actual business operations and your risk level. So not all businesses are the same, and you'll see why in a little bit when I get to the next slide. That's so tailored to your business operations, and FinTrack is very, very picky about that. You need what I call KYC, which is know your client requirements, which includes verifying the identity of your clients, finding out whether they are politically exposed persons, and whether there's anybody directing the instructions around the transaction who's behind the scenes. So you may, for example, have somebody who's living here and they say that they're doing this transaction for their parents who live overseas. That's kind of when you have to make sure, well, who is actually the client in this case? And is there a third party behind who is either giving instructions, and it could be perfectly legitimate. There could be nothing wrong with it at all, but you do have to ask more questions when that happens. You also have to keep an eye on your business relationships, and I'll talk about that in a minute. Record keeping, of course, is an obvious one, because when FinTrack comes in to audit you, all they can go on are the records that you have. So record keeping has really got to be robust, and you've got to stay on top of things. And then reporting, there are 3 types of reporting, largely 3 types, which I'll talk about. And then we have the strange animal called ministerial directives, but I'll keep you in suspense about that until I get to that slide. So business relationship begins the moment that your AML requirements are triggered. So as soon as you have to verify the identity of a person, that is when your business relationship begins. For a mortgage administrator or a mortgage lender, that's probably the moment you enter into an agreement. For a mortgage broker, it's when you start acting as the broker. And of course, you know, sometimes it's not always clear when exactly that relationship starts, but the earlier you can define it, obviously, the better. Business relationships are important for your business, because where would you be without them? And yet, you know, you have to approach them kind of like from 2 points of view. One is that you really want to build a solid relationship with your clients so that they can keep coming back. On the other hand, these are the relationships that FinTrack's actually asking you to monitor, so that you can pick up clues about suspicious transactions. So you want to get to know your client better on the one hand to get more business. On the other hand, you also want to get to know them better to see if and when there are any changes to their patterns of behavior that might lead you to think that something suspicious is going on. Okay, record keeping, as I said, begins as soon as your relationship begins. And you've got to keep records on your client identity verification, very, very important. And there are different ways that you can verify client's identity, but your records, you have to show that you've actually used the process that your brokerage or your organization and your business actually mandates. You also have to record the nature and the purpose of your relationship. And that might seem very obvious. Somebody wants to buy a house, or they're trying to finance a particular thing that they need in their lives. And so they come to you for a loan, and that loan gets charged against the property, which creates the mortgage. It seems obvious, but these are still questions that you have to ask, and you have to write them down. You're also going to assess the client's risk level. Now, you already do this as mortgage brokers, but you're assessing their risk level from a borrowing perspective. In other words, can they repay the loan? What FINTRAC is asking you to do is assess their risk level for money laundering or terrorist financing. So you have to take all kinds of things about your client into account. It may be that your business is in a particular geographic location, that might be a little bit run down, or where there's known criminal activity. So all of those things have to be taken into account when you are assessing your client's risk level. Now, an ongoing relationship, your business relationship starts as soon as you become you enter into some kind of an agreement, or you start brokering a mortgage for a client. An ongoing relationship is if the client comes back to you for a second transaction within a 5-year period. And when that happens, you have got to continuously monitor how that relationship is going. And then, of course, you will keep records about all of the reports that you do, the compliance reviews that you carry out, any compliance reviews that the FINTRAC auditors come in to do, and any reports that you have filed. So let's talk about reporting. I said, broadly speaking, there are 3 types of reporting, but the large one actually is divided into 3 different ones. So suspicious transactions, as you can see, RBC, CIBC, TD, Scotiabank even, they've all been fined for not filing suspicious transaction reports. FINTRAC actually explained recently that they need information coming from a variety of sources to really investigate a matter. And that's another reason why they wanted to bring mortgage brokers into the fold. For example, if they receive a suspicious transaction report from a realtor, one report may not mean a lot, but if a mortgage broker files a suspicious transaction report for the same transaction, then that escalates it in FINTRAC's eyes. And then they start to really look at that. So they rely on everybody as the front line to give them the intelligence so that they can actually start sifting through and analyzing that intelligence. And then, if it becomes noteworthy, they will then share it with other agencies like the RCMP and even international agencies. Okay, so suspicious transactions. A suspicious transaction is a financial transaction where there are reasonable grounds to suspect that the transaction is related to the commission or even an attempted commission of a money laundering or terrorist financing offense. Now, I've highlighted reasonable grounds to suspect, and I'll explain why on the next slide. The threshold actually gets higher. So you have a simple suspicion. You don't actually have any information. You just get this gut feeling or this, this uncomfortable feeling that something's a little bit off. Maybe the client's down payment is too large to be justified by their net income, their net worth, or their income. So that might give you a little bit of a funny feeling. Now you're going to have to ask, well, where is the down payment money coming from? So let's say they tell you they just inherited a huge sum of money from a long-lost relative. Well, it's plausible, but the long-lost relative part of the story is not as believable as if they had said they inherited from their father who just died, right? Or maybe they do say that they just got it from their father who died recently, but you saw the father on the street 2 days ago. Okay, so in that case, obviously, we're getting beyond simple suspicion. In the case of CIBC, for example, they knew that their client was subject to criminal charges. So that really should have led them, and it's not that they didn't do their work, it's just that they didn't do their work properly. So you can see after simple suspicion, we get to the next threshold, which is reasonable grounds to suspect. And here, it's still suspicion. There's a possible, you've got some facts, you've got some indicators, and the whole context of the situation. You get this feeling it's more than a hunch now, because there's more supporting evidence, but it's still not categoric evidence that you could use in a court, right? But you're able to present reasons about why you think it's suspicious. You don't need to prove them at this stage. Now, this is the important stage because this is the stage at which you have to file your suspicious transaction report. And it's possible that the banks didn't file them in time. Because when we get to this last stage, which is reasonable grounds to believe that there is something going on. So now we've jumped from hunch to possibility to probability. And now you're actually able to present a set of facts or evidence that are verified, that can be proven. But by this stage, it's actually too late. Your obligation to file is at the earlier stage where you've got reasonable grounds to suspect. So the next lot of reporting is the large cash, as I said, but there are 3 separate reports that you actually have to file. If it's cash, then you file the large cash transaction report. If it's Bitcoin or any other virtual currency, then you file the virtual currency report. And if it's EFT that you've received, then you would file a large EFT report. And as I said earlier, so that's $10,000 or more in a rolling 24-hour period. A lot of people cottoned onto the $10,000 early on. And so the banks would see transactions for, like $9,999, for example. But then, when they realized that even that looked suspicious, the money might come in dribs and drabs. But you've got to actually monitor that over a rolling 24-hour period. Okay, then the last report is the terrorist property report. Hopefully you never have to use this. What that means is that somebody is on a designated list or is otherwise acknowledged or designated or described as a terrorist. And it doesn't matter how you find out. Maybe you happen to be on a designated list and you saw your client's name on it, or maybe you were at a dinner party and you just heard somebody floating some gossip and this was the gossip. So it doesn't matter how you find out, but as soon as you suspect that somebody is a terrorist, you have to file your report to FINTRAC, and you have to notify the RCMP and CSIS, which is the Canadian Securities Intelligence people, and you have to stop the transaction immediately. You don't tell the client, and you file the report as soon as you can so that the RCMP or one of the other agencies can actually freeze the assets. And if the transaction's already gone through, you still have to file the report anyway. so that they can try and do their best to recover the money. So ministerial directives, the strange animal that I said that I was going to talk about. So I'll touch on this very briefly. Ministerial directives are actually issued by the Federal Minister of Finance, and you have to comply with them. There's three in existence at the moment. There's North Korea, which was issued in 2017, the first one, and had very, very little detail about what you needed to do if there was a transaction going to and from North Korea. And I don't know how many North Koreans actually live in BC, but we have I understand that North Vancouver, in fact, is the largest diaspora of Iranians living outside Iran in the world. And if that is true, then there's a really big possibility that one of your clients is going to be Iranian. And then Russia, in fact, was the latest directive, which just came out in February. So what does the ministerial directive mean? It means that if there is a transaction where you have grounds to believe that the money has either come from one of these countries or is going to one of these countries, you've got a whole lot of requirements that you have to put into place. And effectively, it means that your client now gets bumped up. You may have risk leveled your client at low risk, but now they get bumped up to high risk. Okay, so it can be quite tricky to establish. Just the mere fact that your client happens to be Russian or Iranian doesn't put it into that category. There's got to be some other things that alert you to the fact that the money might be going to or from. So it can be quite tricky, but there are indicators and criteria in the guidance to help you try and sort that out. Nevertheless, I always say, it's better to err on the side of caution. So let's move to the training program. So the training program's got to be in writing. It's got to be for employees, agents, and other authorized persons. Now, it's not clear who these other authorized persons are, but anybody who can get into your system who has access to the information and is involved somehow in the transaction, I would say is an authorized person or an agent. They must understand how their obligations are essential to the whole compliance structure, which means that they should understand what the penalties are for non-compliance, and we've seen how huge the penalties can get. And the training must also provide background on what money laundering and terrorist financing actually is. Now, I'm going to assume that the CAMLO, the Chief AML Officer, is the person who designs the training program. But even if they aren't, whoever it is, when employees or agents actually do the training, there must be a record kept of who did the training, when did they do it, what exactly did they do, how was the training delivered, was it in-house, was it online, was it an external provider, etc., etc. So all of those have to be proven to FinTrack when they come into audit. Then I said you have to do an enterprise-wide risk assessment. You do this, it's also got to be in writing, and you use a risk-based approach to do your risk assessment. And we start off by understanding that everybody has inherent risk. The fact that you're in the mortgage industry or the real estate industry means that you have inherent risk. And then you put in your policies and procedures and other controls to try and mitigate that risk. But you still might be left over with residual risk. And then what do you do with that? Once you've done your risk assessment, you set your risk tolerance level for the organization, and that must be approved by senior management. So let's look at what risk assessment is. You're going to look at your products and services, and you're going to look at them through the lens of how vulnerable is our business to money laundering or terrorist financing, okay? You also have to look at your outside delivery channels. Now, for mortgage lenders, you're relying on your network of mortgage brokers to bring you your business. So you've got to assess the level of risk. Who are the mortgage brokers you're actually dealing with? Who are their clients, etc. Where is your geographic location? Where is the geographic location of the client? You also look at your client base. Who are your clients, generally speaking? Maybe you deal with immigrants. Are they at risk? Do they come from a country that might be regarded or is known to be a hive of terrorist activity or money laundering? And if you identify a client as high risk, then you've got to put in extra measures. So you're going to go beyond your usual client verification. You're going to ask extra questions. You're going to watch the transaction very carefully. And you also have to assess your risk when you put in new technology or new developments in the business. So this is the risk assessment cycle. First of all, you identify your risks, as I said, your inherent risks. And then you set your risk tolerance, which must be approved by senior management. Then you put in your controls, and what you're left with after is your residual risk. Now you evaluate your residual risks, okay? How vulnerable are we still? If you're still vulnerable and you're using a risk-based approach, then maybe you have to actually go back and re-identify your risks and go through the whole cycle again. Now, you'll probably never end up at zero, and that's okay. You may come to a point where you say, well, there is residual risk, but the probability of it is low. The impact, if it does happen, is low, and you're willing to live with that. So when you're reviewing, it could be anything that triggers that. It could be, maybe there's a new ministerial directive. Okay, now we've got to go back and reassess our risk, or you find another group of clients, or even you bring in new technology. So always be alert to the fact that even though you can do your risk assessment on a regular basis, you should always be prepared to do it if something changes. And then finally, I'm going to talk about the 2-year effectiveness review. Every business that is subject to the anti-money laundering has to do a review of their compliance structure every 2 years. So for mortgage brokerages and lenders who are already in existence right now, obviously your obligations start on October the 11th, 2024. That means that your first 2-year effectiveness review must start no later than the 11th of October, 2026. Okay. So what happens with this review? It's to test whether there are any gaps in your compliance program. You take the opportunity of the review to actually describe the scope and all of the elements of your compliance program. Now, you can use an internal person, or you can engage an outside expert, somebody who knows AML obligations. If it's an internal person, FinTrack would prefer it if that person's not directly involved with compliance. Now, we do AML reviews for our clients because often they can't afford to have somebody spend all of their time, or maybe there's too much of a conflict because the only person who knows about AML is actually involved in compliance. But obviously for small brokerages, it might just have to be somebody that is already in compliance, and that would be okay as long as you document the reasons why that person is doing their own review. So how is the review going to look? So the plan has got to be designed with all of these things in mind. It's got to set out the scope of the review. It's got to describe all of the elements of the review of the compliance program. It's got to actually test. So, what kind of testing methods did you use? Did you take out 10 client files, for example? What kind of sampling did you actually do? Did you do it across the board for all of your clients, or did you just test a particular subset of clients? What were your survey or interview elements? For example, did you interview anybody who was directly involved in compiling the information in the client file? What's the time period covered by the review? And then you must document the deficiencies that were found and the steps taken as a result of those deficiencies. If you find any gaps in the compliance structure, then you should be recommending changes, and then you present that to senior management with your findings and conclusion. And if you are recommending changes, then senior management should really decide whether those changes should take place, and if they decide that they do, they should be implemented as soon as possible. So that's a lot of information, I know, even though I kept it kind of like at a higher level. As I said before, you're welcome to get in touch with us to find out more. We have an online training program that's actually live on our website that you can do at your own pace. It's a little bit more than an hour long, but it's divided into short segments of about 10 minutes or even less, so that you don't get brain overload. So if you're interested in that online program, you can always register for that. We also design policies and procedures to fit your business model, and we're developing a training program to get everybody ready. This would be a more dedicated and detailed program, which is really meant for your CAMLO and the compliance people. So if you want to learn more, please feel free to get in touch. I discovered last night that QR code actually links to my personal LinkedIn rather than the business LinkedIn, but that's okay. Just click on it, and if you get in touch, I'd be more than happy to meet you, and if I already know you, to renew our acquaintance.
Wow,
so
Veronica,
let's open it up for questions. I see that there are a couple.
that was such a fantastic presentation. Thank you so much. I know it can be very dense subject matter, but of course you're a fantastic speaker, and you told it to us in very simple and plain terms. So I really appreciated that as a layperson coming from outside of the sector. So we've got a couple of great questions. I've been making notes of my own too. I'd like to remind everyone on the call that Q&A button at the bottom of your screen, please use that to submit your questions. We've got about 15 minutes left in our presentation today, so we should have time for all of them. Okay, so a great question from Martin. Realtors have been working with FINTRAC and suspicious reporting procedures for some time. Given the requirements now for mortgage brokers, I see a real opportunity for realtors and mortgage brokers to work much more closely on a given file. Do you have any thoughts?
I think that that's really great. Obviously, you would both have a separate obligation to file a suspicious transaction report. And you probably know, if you're a realtor, that FINTRAC has been working really hard for the past couple of years to implement a web-based reporting system. And they've been giving lots of education webinars and other kinds of information to help people with reporting through this web portal. So, but the opportunity for realtors and mortgage brokers, because the realtors already have experience in this area, I think that's a really, really good idea. You work so closely together on your transactions anyway, that this is another opportunity to actually extend your collaboration.
That's a great answer. Great idea, Martin. Thank you for that. Another great question from Martin. My understanding is if FINTRAC does an audit and the brokerage has a lack of compliance procedures and training, FINTRAC will likely assess a fine on the brokerage. If a realtor should have submitted a suspicious transaction report and did not, likely the realtor and not the brokerage could be fined. Is that correct?
Well, it depends on where FINTRAC does their audit. But if they find that there is a suspicious transaction report that has been filed for a transaction, and the other, I'm going to call them connecting person in the transaction, so whether it's the realtor or the mortgage broker, did not file a suspicious transaction report, I think that you can bet that FINTRAC auditors will be in that business, looking at why there wasn't a suspicious transaction report filed. Obviously they can't go through every single one of them because they do receive a lot of suspicious transaction reports, and they actually do go through each of them individually. But I think that because they're placing so much emphasis, and really all of their groundwork for investigations actually starts with looking at the suspicious transaction reports, that you can be pretty sure they're going to look at all the parties involved, and they'll go in there for an audit, even if it is just for that one file. So you have to be very, very careful. And let's get back to Martin's point. A great opportunity, in fact, if one of the parties, let's say the mortgage broker, files a suspicious transaction report, talk to the realtor and say, this is what we've done. Don't know whether you've actually decided whether it's suspicious or you've got reasonable grounds to suspect, but we did our homework and this is the conclusion we came to. We filed a report. Maybe you should think about it too.
That's a fantastic point, and definitely something you don't want to leave yourself open to when you're in the industry. So, Veronica, you did such a good job addressing this topic through your presentation that I was writing down questions and crossing them out as you answered them as you were speaking. At the beginning of the presentation, though, you shared with us those big, scary numbers from RBC and TD, and we saw CIBC as well. And you mentioned, yes, they might be a drop in the bucket for a very large financial institution, but numbers like that would obviously cripple a small mortgage brokerage or PRC. So is there a place where those who might be affected by this can see a published ladder or schedule of fines related to legislation?
Yes, you can go to the FinTrack website actually and just search for administrative penalties. And in fact, one just came out this morning. So 2 days ago, Binance, and I don't know how many of you are into crypto, but you might have had an account with Binance before they pulled out of Canada, which they were kind of like virtually forced to because they hadn't registered with the securities regulators. Well, they also didn't register as a money services broker with FinTrack. And not only that, again, they didn't file the large EFT transaction reports with FinTrack. So Binance actually 2 days ago was fined $6 million. So you can see that, a lot depends on who's got the deeper pockets. But even so, if you look at Lahomes Realty, I don't think that $300,000 is a small amount. Remax Kelowna, $150,000, So I think FinTrack never used to actually say that they would, issue a press release and you might be able to find on their website who's been fined, but you would never know the reasons. But they're committed to more transparency, which I think is really great from a compliance point of view. That's how I was able to actually say, this is what RBC did wrong, this is what CIBC did wrong, etc., is because they're now actually, they don't put out a lot of information, but they put out enough information that everybody can say, okay, I've got to be very, very sure that I am doing this. And because they rely so heavily on the suspicious transaction reporting, that's really an area that you've got to watch. And they have lists of indicators of when a transaction could be suspicious, but it's a learning curve for sure.
That is fantastic. Thank you. Now, I know often when new regulations are imposed on an industry, there's essentially a grace period where they might be taking more of an informational and educational approach rather than punitive to violators or folks who just haven't been compliant. Is there any indication that that will happen here? Or should we expect October 11th, you need to be fully compliant, you're not going to be given a second chance?
Yeah, I think that there's no indication that there's going to be a grace period. I think that, people in the mortgage industry should take the view that FINTRAC gave them 12 months notice, right? The legislation was actually passed in October 2023, and FINTRAC said, well, we won't actually put it into effect until October the 11th, 2024. So basically there's a year for you to get ready. I'm just going to say to you, if you haven't started getting ready yet, you'd better start soon.
That's great. So we're in kind of
That's a
the
great
period
question.
now. This is the educational period, October 11th. You have to be ready to hit the road. Now, for a small brokerage or somebody who might even be a solopreneur, and they're looking at some of the work that is going to be necessary in coming into compliance and maintaining that, the 24-month reviews, what can you tell us about some of your services or other services that might be available to support businesses so that they're not taking this all necessarily in-house?
Yeah, no, thank you very much for that. I think that where we will be able to be of use and certainly help would be to help those people develop their policies and procedures. I'm thinking particularly of the private lenders. Private lenders very often are just by themselves. It's one person, right? I don't even know if they're aware that this legislation is going to apply to them, but we can certainly help, whether it's a small organization or a large organization. We can help develop policies and procedures. We can help with training staff. We can help with training the compliance people. We can help with implementing the controls to put in place. There are a lot of service providers who will do identity verification. And so particularly in this remote world, if you're meeting with your client in person, it's relatively easy to verify identity because you're going to see, you're going to ask them for their government issued photo ID and you'll be able to match whether they look like the same person. But as soon as you start doing anything remotely, then I would say, get one of the service providers to actually do that. If you have a crypto account, for example, and if you do any other kind of financing or investing online, you'd probably be used to the, where you have to take a photo of your ID and you take a photo of yourself. They're using authentication technology and it will save you time. It might not save you money, and but in the long run, I think it's definitely worth it to use one of those service providers.
Oh, that is fantastic. Well, thank you so much, Veronica. I guess one other question I have. So say a mortgage brokerage has put together everything they need to. From their perspective, they have achieved compliance, but there's a transaction that is later found to be related to terrorism. Now, they took that person through their entire process. They did the risk assessment. Nothing was flagged at the time. What is the burden of proof that they will have to FINTRAC or to the regulator to say, we tried, essentially?
Right. Yeah, I think that what people will find is that the examiners at FINTRAC will be reasonable, but it doesn't mean that you're not going to get a fine if they find that the standards weren't quite what they expect them to be. And it's not that they're holding people to a high standard, it's that they expect everyone to be reasonably sure that they're going to catch things. I think one of the problems with the banks, and particularly in TD's case, is that the different branches and the different departments were not speaking to one another. And even though they had a central compliance department, that department wasn't effectively monitoring what was going on at the different branches and making sure that everybody was on the same page, right? So FINTRAC wants to be reasonable, but at the same time, they do expect that you're not going to let things slide. Now, we can go in and we can help. If there are deficiencies, we can certainly go in, we can help people rectify those deficiencies. As I said, I can't remember if I did, but we also help with the 2-year effectiveness review. And that is really designed to find gaps in your system. So if we do that, and we don't have to wait for the 2 years, we can come in at any time and audit for you, particularly if you know FinTrack's coming in, we can come in and do a pre-audit. So we can certainly help that way, because if we identify anything that we know that you can be that can be fixed, and we'll look at your transactions, we'll take a sampling and we'll test them against the requirements to make sure that in fact you are covered.
Thank you so much, Veronica. And I see we just have one last question that's come in from the Q&A. Thank you, Martin, again. If I have a sense that there is a potential for money laundering or a dodgy deal, can he, as real estate agent, refer to you for legal opinion before going forward?
Well, I think that would not be a legal opinion. It's certainly getting an outside opinion, and that's not a bad thing to do, to get somebody else's view of, does this look suspicious or not? I think if you're not certain that it has risen to the level of reasonable grounds to suspect, and you're still kind of like at the hunch stage, it's not a bad idea to bring in somebody else to say, well, what do you think about this? Are there reasonable grounds to suspect?
Great advice. Thank you again, Veronica. And now, as we wrap everything up, I would really like to thank once again everybody who has joined us on the call today. I am sure you learned something today. I know I absolutely have. Before we part for the day, I just wanted to remind you of some other great upcoming events we have at the Chamber. Next Tuesday, May 14th, we have our next 5 at 5 Ready, Set, Network event. I think we're the only chamber in Canada that does a running and networking group. So 5 kilometers at 5 p.m. But we do also have walking options. We're going to end at 5 Roads Brewing. So this one is really 5 at 5 at 5. And then Thursday, May 16th, we have our Women in Leadership Lunch Series for May. We're going to be tackling some of the barriers to entrepreneurship, the entrepreneurship gap for women who are starting companies, and looking at some institutional solutions to gender disparity. Now on May 23rd, one of our members' favorite events, Business After 5. That is a Thursday at Vivid Green Architecture. If you've been to an event hosted by Vivid Green and Rosa Salcido before, they do a fantastic job. And then one of our biggest events of the year, June 6th, our 41st annual golf tournament, a full day of fun with sponsors, lots of food on the course, a little bit of booze, great food at the dinner banquet as well, and in service of our scholarship program. And if you know a graduating Richmond student this year, our scholarship program is currently open for applicants. So it's the Carol Young Scholarship, $2,500 for a graduating Richmond student. And we would love to have your friends, families, contacts represented in there. You don't get an advantage for being a chamber member, but it's good to know about the opportunities for the young people in your life. And once again, thank you for joining us. I hope to see you at one of our other upcoming events soon. And please get in touch if there are any other Lunch and Learn topics that you would love to see in the future, or if you yourself have a level of expertise that you would like to present on. So thank you again, Veronica, and have a great rest of your day.
Thank you very much. Thanks, everyone. Bye-bye.